Yeah.
All right. Cashflow Chronicles. We are back. StreamYard, though. So it's a good time. Back with KRIS. Thank you, as always, for joining us. I was literally listening to your guys' conversation at the end of Finance Junkies. So you guys are always cracking me up. You guys are doing a good job over there. So much appreciated. Try not to overlap with you guys. So it's always nice to. Well, I can't, I guess, because you're on both, right? So anyway, I was just telling KRIS, and then we decided to hit the start button. Had a great month in November for YouTube income. A lot of that's just based off of what we do every day on the Cashflow Chronicles, talk to people and all the super chats that you guys provide and just chatting and providing any sort of value that we can to you guys. KRIS, I never got to say the value that we got, $350. So in that respect, we hit over the $700 mark. Actually, might as well just share it. Share screen. Window. This guy. There we go. So yeah, this was the portfolio. We had just about over 700 bones. So it's cool that we got to $700 basically in the portfolio. And with that, we added $357.20 just based off of what we got in November timeframe. So getting to the point now where we have about $400 in cash. So it's one of those things where I need to chit chat with you and say, what things do we want to keep at a constant in the portfolio? Like, do we always want to keep Upseller at 2%? Do we always want to keep Dutch Bros at 3%? So stuff like that, where it's like we can always just keep a set amount of cash on hand, and anytime we put money into the portfolio, we can kind of talk about it. But I think that this is cool because you and I talked about this when we first started up. We wanted to try something different on the internet and kind of create this public account for everyone to kind of see and be able to kind of chat with us about throughout time. And you and I always kind of talked about going to $100,000 and how cool that would be before we really started to take any opportunity. Hey, Ren, thank you for the $10. That's really appreciative. It's going right back into this portfolio here. So
all the viewer money, all your donations, anything that you guys contribute goes right into this portfolio. And like I said, to me, this helps in two ways. One, it funds me and Matt's ability to not take on extra stuff and just to keep doing more and more research and to actually make this kind of whole thing meaningful for us and meaningful to you guys as well. So we really appreciate it, by the way. And like I said, hopefully you guys are getting value by tuning in and seeing like, okay, yeah, like this is a great way to, invest in this thing or not or whatever. So.
And this includes any YouTube videos that I do as well. I'm too lazy to keep track of what's live income versus, so any money that I get from YouTube, I just throw right into here. So, but yeah, it's a talking point now. Like the goal was always kind of get to 100 grand, and just like, that's kind of our goal. It's to see that we're already 1% there. And we really have only been doing this full time, I think, for like 3 months now. Because we're on episode 50.
Not even 3 months. Not even 3 months, dude. It's like two months.
Yeah, it's 2 months. It's pretty crazy. So I hope we continue to grow this, and with that, curious about any thoughts, if there's any opportunities that you see in here that we need to add to, or we could talk about it offline. But
well, so here's a couple of things really quickly that I've noticed. So right now, I think we are definitely in disinflation mode, and we could be heading into deflation mode. So our portfolio hopefully should be aligned to capture the alpha in that. So anything that's super speculative should probably stay out of the portfolio. I'm glad we have like the TLTs of the world, the Verizons, the CCIs, the AMTs, because you can see over the last month, they've actually done okay. But on top of it, now we're going to start to get dividend payments from them too, because their dividends are coming up. The one thing I regret not adding, and me and you both have this in our portfolio, which is SLG. SLG had that giant run, you know, and
they pulled back into the 20s again, like the high 20s. And I was like, damn, is this going to be? And then it was like, right as soon as the bond rates started going back down again, it's just been an absolute moonshot over the past week or so. So I'm just writing covered calls on it, man. Far out of the money. far out of
Yeah.
the money, but
That's good.
still making money. It's like an extra dividend. You know what I mean? Like,
Yeah.
how can you
On
complain?
top of a very generous dividend right
Yeah,
now.
exactly.
That,
Like
that the
I think
companies, yeah.
I'm
Sorry,
up
go ahead.
80. I'm up 80% of my personal portfolio. You have calls, right? You don't. You have some shares, some calls.
No, I have only shares of SLG.
Okay, I was about to say, I was just like, you're gonna have to DM me how much you're up, because if you had
No.
calls, I'd have been like, Jesus Christ.
No.
It was something else that I'm thinking
Yeah.
about, that you instead of getting
Verizon.
shares, what's it, Verizon? Okay.
I have some Verizon calls. I don't have a lot of Verizon calls. It is a small portfolio position that has a lot of Verizon calls, but it's not a large amount. Because the thing that was really amazing to me with Verizon calls, they were super cheap, like so cheap. If you look at
the volatility so low,
yeah. And so when I look at it, I was like, wait a second, this makes no sense that the company's like calls would be this discounted. So I bought a good amount, but it didn't cost me a lot at the time, relative to its valuation. So you can go to the one that I have. Like I have the $35 calls.
2026 or
2026, and look at the history of that real quick.
Wow.
And I also have some. I also have some
good
spreads.
spot to...
So go to add to watch list.
Add
to watch list. No. Go down to the left. Add to watch list. There you go.
Oh, there you go.
Add to watch list. Yeah. Right. And just go to the watch list. View watch list.
I never knew that you could look
click
at the
on that
contract value over time.
So now you can see what they were. So if you go like 3 months out, right? So you can see in October, they were trading at almost $2. Right now, they've doubled up in price on just $35 calls, which is literally so damn low compared to its intrinsic value, right? So it made a lot of sense to just buy some of these and just relax a little bit. You're getting 2 years worth of upside, and it only costs you $2 at a $35 call. So I was just like, hey, this doesn't make any sense.
I gotta teach you to write some poor man covered calls, man. I don't know how many shares you're sitting on, but I'm not talking even close.
I have a lot of shares.
But I'm saying, like, hear me out, right? And maybe this is too much for everybody, but a poor man covered call is basically having what KRIS has in his portfolio, right? And then essentially KRIS basically owns the stock, because he's basically sitting there on break even of, at the time, $37, if you think about it, because a $35 strike and it's a $2, $2.50 sort of cost to it. So basically KRIS could write any covered call contract in the short term. He could write it on 2026 if he wanted to, but just to generate a little bit of extra income. So KRIS could come out here and say, what's something that's super conservative, right, that I don't think is going to get called away? The $42 for January 19th, 2024. And he could say, well, I have 100 contracts. Well, this is $6 a contract. He could write it, make $600, because technically, even if this does breach this $42, KRIS has the long call, which is technically basically shares, because you're owning it at $35. And he gets to not only get all that money in between the 35 and 42, but he also gets to keep the $600. But even better yet, say it sticks around at $38, $39.
Yeah,
he could just keep writing this contract every month and get another $600, which is kind of cool if he has 100 contracts. I don't know how many contracts he got.
But it's terrible. I'm not going to say how many, but it's in the 3-figure mark. I do have over 100. I will have over 100.
But that's what I mean. Like you could go so far out. Like you don't even need to...
just to let everyone know, those 100 contracts didn't cost me more than $20,000. Like 20,000. I mean, I don't want to brag, but it's not a big position for me. So just letting you know, just putting it out there.
That's pretty crazy, man. I should have listened to you on that. In fact, I should have listened to your cousin, or was it your brother, who bought the SLG contracts, and you're the dumbass that bought the shares. Me and you are the dumbasses that bought the shares. Anyway. Yeah. Cool. Well, I have some interesting thoughts. I was actually just catching up a little bit about what's going on in the market. So yesterday, everyone had a little bit of a spook, so things started to sell off a little bit. Crypto, on the other hand, has been doing really well. I don't want to dive deep into that, because you guys over at FJ have started to almost turn into crypto junkies with the amount of crypto talk that I hear over there. But I'm just surprised. I'm a Bitcoiner. I have just about 1 Bitcoin, so I don't have a lot. But my hope is that it goes to $1 million. I could sell it and buy some rental properties. That's really the hope, right? But at the end of the day, I think that's pretty cool. And I'll have to pull up some tweets. I've been thinking and talking about this for a lot longer than I'd like to admit. But with the confidence that I had, I'm surprised I never got to 2 or 3 equivalent Bitcoins. So I'm a little bit of like kicking myself in the butt. But regardless, I was looking at, I forget whom it was that was on CNBC, but they were talking about top plays. And this gentleman brought up Expedia, which I thought was pretty interesting because he was talking about how they're trading at a pretty decent discount. And they started going through all these different travel sites. And to keep in mind, Expedia is not just the website, right? They also own VRBO. They also own a few other pieces of companies that are doing rather well. And I started to think, and they started talking about Broadcom and a bunch of other companies that, to be honest, still see a lot of potential value with respect to where we are in the cycle, how well things have been over the past few months with respect to the recent bull rally that we've seen. And he was basically saying, stay out of the indices and look for good, independent individual securities that you think are, for some reason, superiorly undervalued comparatively. And I was just wondering, I mean, I know you have Verizon, I know you have a few other companies, but they were just trading like Broadcom being one where no matter what, even though Broadcom's able to grow their earnings at about a 30% pace, their price to earnings is always like below 15. They just kind of were talking about how they've been an M&A.
Broadcom is AVGO, just letting everyone know so they can follow along.
I might as well share but they've been able to grow. And I don't know much about Broadcom other than a few people that I've invested with in the past were big AVGO fans. And I never personally invested, but it's just been, and this is about 13 years of progress. And they're up about 5,400%. They continue to just absolutely smash it out of the park. The guy was just talking about how it's a masterclass in acquisitions, and they just acquired VMware and a bunch of other things.
Their biggest asset is their CEO, Hock Tan, bro. The best, one of the best.
You talked about this last week, right? I think you somebody asked who your favorite CEOs are, and Hock Tan was like one of your favorites, you said.
Yep. The guy knows how to run the business. You know, they know exactly how to strip costs out of companies that they basically acquire. They understand what the value of the technology is, how to integrate it into their broader ecosystem, upsell the product, cut costs. Like, he's a business operator. That's the key. Like, when you have a leader who like looks at a target, says, okay, look, under the VMware is a great company. It's got a great product, but it's losing right now. I can see a product that if it was under our umbrella, I could strip out costs here. I can make these improvements here. I can hire these key individuals and put them in charge of this division and really grow the business to the next level. And like I said, that this is what you need with a good capital allocator. So Hock Tan is probably one of the best CEOs in Silicon Valley.
So this is a great operator. So you don't own any Broadcom personally?
You know, Broadcom is my ex-girlfriend, man. What I mean by ex-girlfriend is she's always on my mind. Damn it, I shouldn't have said that. Now the wife is going to give me a headache. She's always on my mind. She's always on my mind, but I'll never, ever do anything with it because I'm always scared, So, like, damn it, man. I hope she wasn't listening. Now I'm totally fucked. Thanks a lot, Matt. But
can't blame me. Trust me, I put my foot in my mouth at work all the damn time.
So yeah. Broadcom is like a girl from high school that you liked. Nothing that you dated, but someone like you dated in high school. And you think that, hey, she's gonna get uglier over time, but this bitch keeps getting hotter, and now you're fucked.
You keep going, man.
I'm fucked, man. All right, whatever.
She already
I got a date on the couch tonight. Whatever.
The date on the couch, and she's gonna put a slit in the closet door so she can put your meals through to keep you locked up in there. It's oh man.
I did ex-girlfriend. I met like a girl from high school who you thought peaked a long time ago, but she just keeps hotter and hotter. I did not mean ex-girlfriend. Okay. Let me try.
He meant a general ex-girlfriend. He didn't have anybody in mind. I knew exactly what he was talking about.
Just a girl. No one.
Just a lady.
Serious.
Just one.
You like her, but you don't dare touch. Yeah, pretty much.
Oh my god.
Yeah.
I don't even know where to start. But anyway, so I need to do a little bit more research because I thought that one was a pretty good, like kind of talking point with respect to how even though this thing is completely running, now it's getting to a place where they're saying it's a little bit expensive, but they were just basically talking about how it's been so cheap because they continue to just blow the earnings out of water, revenue continues to grow, that now it's only getting to a place where it's started to get slightly expensive, but otherwise it's been pretty cheap. I just wanted to say Apple for the past few days has been doing pretty good. It's not up to all-time highs, but it's back over 3.
I didn't mean it like that. All right, whatever. Fuck it, she's mad. Whatever.
She probably just did.
No, you can't have 75% of my shit. 25 is not enough for me to survive on. All right, whatever. Let's go. Let's finish this pod, man. We're have a nice discussion after this.
You're like, I wanted to get some work done, and now you get at the 2-hour conversation. $3 trillion market cap once again. Do you think that Apple as well as Microsoft are worthwhile for these $3 trillion valuations? Do you think it's just way too expensive?
I mean, they're still growing. As long as they keep growing, no amount is too much. They're category leaders in what they do. They're still growing their market share. They're still growing revenue. They're performing. I think the key is if a business is performing, why sell it? So they deserve their well, sometimes you can say like, hey, they might not deserve their valuation as much, but I think the alternatives right now and with a lot of other companies is there's a lot more risk. Whereas with these guys, there's almost no risk. Like, who's replacing Microsoft? Go ahead, tell me. Who's disrupting Apple? Is there anyone? So they're the obvious safety plays, So that's why if you look at the market today, pretty much everything was down with the exception of Microsoft, Apple, Google, Amazon. Big tech is the safe bet. They're actually a proxy for, I guess, the safety. So.
Yeah, I think, when you look at Microsoft, you're looking at at the moment, revenue leader with respect to cloud. They're surpassing AWS in that respect. AWS probably has a greater market share, but they're probably just keeping it as a growth position for them where they, how Amazon generally works, right? They try to beat out their competitors by cost versus Microsoft. They generally try to just eat as much cost as possible. Rip you off on their cost as much as possible. So they basically amp up the revenues as fast as possible at Microsoft to look for the next innovation that they can get into. But they're also doing a really good job from a gaming perspective. Apple obviously has the phone market, so they're pretty hefty on that, and nobody's going away from the iPhone at the moment. So until you have something that disrupts that, I think that Apple will continue to be a staple within at least American society and obviously international as well, because the iPhone sells really well international. But I don't know. The thing that concerns me a little bit about Apple has always been the iPhone, but I've obviously been saying that for 6-8 years, and I've lost a crap ton of money from an opportunity cost perspective by not investing in Apple. So
Same thing with Microsoft for me. Like I saw Azure coming a mile away, but I was just like, the valuation seems stretched, blah, blah. Maybe I'll buy it when the valuation makes more sense. And it rarely ever makes sense with companies that are performing the way they do, so you just have to, you can't use value. You can't use traditional value investing strategies when it comes to companies like this. You just have to look at what kind of potential for return is this company going to be able to generate? Like, what are some of the things that they have? So if you look at both Microsoft, Google, Amazon, these guys are cash, well, not Amazon as much, but Google is a cash flow generator. They're just using their cash to buy back shares like crazy. So right now, just, like, so we talk about dividend yield. Do you know what Google's dividend yield is? If you just consider the cash flow yield on its buybacks, it's about 6.5%, 7%.
Yeah, I was going to say,
and that's 7.5% compounding. Remember, 7.5 compounding buybacks. That's
before any growth. Yeah, before any growth. Yeah.
Before any growth. If they have growth on top of it, about 10%, that's like a 17-year CAGR. I mean, a 17% on CAGR. So if you look at their EPS guidance, like the EPS expectations for Google, they're tremendous, so.
Yeah, I mean, I heard that Vitaly was talking about $200 stock price. And I kind of agree. And I know that's where your head's been at for Google for a long time. But I think it's going to take some time for it to grow into that. I mean, if you look at it from a price to earnings perspective right now, it's starting to get to a place where I would say it deserves to be. I think it deserves between $22.50 and $25 per dollar of earnings. So price to earnings between, low to mid 20s, I think is appropriate for it. So in that respect, I mean, it needs to earn what, $8-9? Is my math even good on that? Mm-hmm. For it to be worth, for it to be worth, and I think it's going to get there very quick. I think with what we're seeing with GCP, I think it's going to get there way quicker than people really anticipate. But
here's the consensus so far. If you want to just take a quick look on Google, so to share my screen real quick. There we go. So this is the analyst consensus on a yearly basis of where Google could be. So for 2023, their EPS is about this is the high. So their EPS right now is about 5.75%, which is about right. On the high side is 5.9. So if you do these statistics, you can see like, hey, use this and give it some valuation. You can kind of project out what the stock price is going to be if they're able to live up to these EPS guidances. So by 2025, let's say they hit their 7.81% EPS consensus estimate, multiply that by about 25 times, right? If you got a PE like this, let's see, calculator.
Which year? So, which year you want me to take?
That's 2026. So December of 2025. Oh. So multiply this by 25, that gives you a valuation of about $195 a share. And that's the consensus right now. That's not if they beat consensus. It could be higher, but the consensus right now by December of 2025 with a 25 PE, which is what they usually trade in. Like they trade between 25 PE most of the time and 30 PE. It ends up being $195, right? So if they're able to hit the high side of their EPS target, which is like 8.65 times, let's say, 25 again, that's 216, right? So yeah.
I should have followed you, man. I should have bought leaps. But anyway, I mean, my thought process, I'm planning on holding the shares. I want to get to 400. I'm at 380. Shares. I'd love to get to 400. I should sell it all and just buy calls, man. Fuck. But it goes back to what you're talking about, right? So what you're talking about there is it's not crazy. It's not crazy revenue growth, right? It's
10%.
It's 10 to 15% revenue growth, and then buying back a crap ton of stock, and that's all it is. It's nothing.
80 billion a year in buybacks.
Yeah, like that's all it is. So when you think about it, it's like hold that stock, because if you think about it, they're buying back what, 4 or 5%, 6%, you said, a year. Do that for however many years. I mean, if they're able to do that for 10 years, their stock price is going to absolutely explode, even if they're at double-digit growth.
And what's interesting is Google did not do the share buybacks like for a long time. They've only recently been doing it. All right, let me just see if I can share that. 1 second. Sorry.
If you like this type of analysis, KRIS does this a lot in depth on his Patreon. So be sure you guys check out his Patreon and the descriptions in the link below.
So this is Google's share count outstanding. This is after the split, of course. But if you see here in 2018, they had about 15 billion of in shares outstanding. They've been whittling away at that share count continuously. And look at this. Now they're down to 13.57. So if you think about it right now, they're doing about, let me just see, Google share buyback authorization. This is from August. This is fine. They have about 70 to 80 billion dollars of share buybacks per year, right here. So, and they keep raising it right here. So Google announced $70 billion share buyback. So over time, Google keeps buying back its shares, which boosts its EPS. So if you look here, stock buybacks lift stock prices in several ways, reducing the number of outstanding shares through buyback, increases its earnings per share, assuming net income remains the same. EPS is a key indicator, blah, 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 blah. So, but yeah, whenever a company's buying back shares, it's nice. It almost acts like a decelerant if the stock price is going down.
Yeah, no, it does. I mean, we were talking about it at work today because I work in oil and gas, and we had our holiday lunch before people start going on break, and they were talking about buybacks. Our company does a lot of buybacks, and we were basically just talking about how it does one of two things. Obviously, it eliminates the share count. So even if your earnings stay flat, your EPS is going to grow, which obviously share prices are all based off of what the market cap of the company is, what people are valuing the market cap of the company, and dividing it by however many shares outstanding. So if you eliminate 20% of those shares, your EPS will immediately jump 20%. And so obviously that helps with respect to that. But then if you're able to grow on top of that, it's even more of an accelerant. But not only that, because you could technically, you can't just say, oh, well, the earnings multiple is going to stay flat. It's all fluid, right? It's all based off supply and demand. So it goes back to what you're talking about. It provides a floor to the stock a little bit, because when you're buying back $70 billion worth of shares, somebody's going to have to sell $70 billion worth of shares. So if $70 billion are being sold, that's obviously going to have to be bought up by somebody. And if it's being bought up by Google and people still want to buy into Google, now the demand is even more, because the demand of $70 billion worth of shares being sold is already bought by Google. Then we're going to have to come in and compete against Google to buy their own shares. And Google has $70 billion. They have a little bit more money than we do, I would say, in that respect.
They have $100 billion in cash right now. And
so they don't really care.
Yeah. Right? And look at how much they're generating in terms of operating cash flow right now, Matt. Take a look at this. They're generating $81 billion of operating cash flow right now. That's, by the way, growing again after they started doing layoffs. So if you look on a quarterly basis, look at this. This is crazy amount of cash flow that they have, man. I mean,
and GCP is growing at 30% per annum and has just gotten to a place where they're profitable. So that ops cash, I think, is about to explode even more so. But it just goes to show you, I mean, even if they stayed at a constant $80 billion in terms of cash flow and they were to just buy back 4 or 5% a year, the stock's going to grow 4 to 5% per year.
Yeah, man. So, I mean, look at if you just look at their cash flow statement, right? They are generating right now in net income 20 billion, but then once you strip out depreciation and all these other things, look at it. Then this is on a quarterly basis. Let's just go based on a TTM basis. Cash from operating activities is going to be about $106 billion that these guys are generating. Some of it they're using to pay back debt, but they don't really have that much debt to begin with. Most of it, look at this. It's going into buying back shares. So this is on a TTM basis. So this is last year going back 12 months. But if you look on a quarterly basis, they spent 15.78 billion in share buybacks this quarter, in the last quarter that just ended. And this is going to keep growing, as it goes on and on and on. And so this way, if you look at it on a cash flow per share basis, it's crazy, man. $22 billion in free cash flow.
That's absurd.
And this is with them not taking on any debt anything. They're sitting on almost what is it, 100 right here, these short-term investments. This is 89 plus cash, like cash like equivalents of 30. So they almost have 120 billion in just cash, excluding plant, property, and all the other stuff that they have. So
what do you do with all that? Do you just wait? Like, I just don't understand. Do you buy back shares? I mean, I don't. What else do you do? You're investing. They're not being short on there. I mean, you look at the capital expenditure, right? You just had it up on the screen. Yeah. It was $28 billion for the last year. It's like, it's not like they're starving the business of innovation
at all.
So it's,
look at this. Look at their free cash flow, dude. Their free cash flow is higher than it was in December of 2021 when the price of Google was actually higher than it is today. So it's mind-boggling that Google's valuation should be what it is today, but it is. Hey, listen, sometimes the market is a little bit not so generous with their valuations. So,
well, it just goes back to what that gentleman, I forget who it was, on CNBC, he was basically talking about buy some of the individual securities, because if you think about it, right, and this is a good example, the SPY is up great this year, right? But had you had bought something like a Google, something like a Meta, something that was completely outrageously outpriced and hit so drastically in 2022, you'd obviously be up 60, 70% this year on a lot of different positions. That Meta wasn't going anywhere. It was still making a crap ton of cash. You and Vitaly absolutely killed it on that one. I was too busy buying Amazon and Google at the time. I didn't do nearly as well, but I still did okay. I mean, how much can you kick yourself in the butt? I didn't make the Meta returns, but I made the Google and Amazon returns. You can't complain with that.
My key to investing in Meta, but I had Google as well, so don't get me wrong.
Yeah.
I was a little bit more convicted in Meta because Meta was just straight like firing 20,000 people at one time. I was
trading at a PE of 10.
7.
Did it get down to 7? I just
7. Meta had a PE of 7 at one point.
I don't know why I didn't buy Leaps. Because I didn't have any money. That's right. I was too busy.
Yeah.
That was like when I told you. So that every time the market goes down, I literally go to the brink of literally just almost eating peanut butter jelly sandwiches. I remember at the time in 2022, I posted a picture of ordering a bunch of ramen. It was a big packet of ramen. And I was making a joke, but I was actually kind of serious. I was just like, I mean, why am I ordering Uber Eats and like going to make steaks and stuff like that if I could just eat some ramen? And I did the same thing when I was in Trinidad during the pandemic. Like, I was just like, I'm just going to eat cheap for a month or two and, just throw the rest into the market. And it's always proven to be a great opportunity to do that. Obviously, you can't do that if you have children and wife. Maybe the wife will be on board, but the children will be like, Daddy, what the hell is going on? Are we poor? But anyway, it's always worked out for me.
Take a look at this. This was Meta's PE. If you look at it, Meta usually trades about a, pretty sizable PE, about 30s in the 20s, right? So you can see here on average. But after that giant drawdown, their PE was 8.48 with a forward PE of, I think, like 5 or 7, something like that. Ridiculous PE, dude. And that was just like, after that, it was just back up to normal again. See? So now the PE started to get back to, a little bit frothiness, but it's back here again because they're growing. They're still growing. So you see this PE is going down this way, not because the stock is going down. It's because their earnings are going up, so it is what it is. That's how Meta is, baby. Yeah.
This one's a good topic generator. So Laura, thank you for the topic. This year's been such a great year to earn. I know that you personally, Chris, like going into 2024, you haven't been bearish, but you've been taking a step back. I'm curious, with what you've seen over the past week or two since we've last had this conversation, are you turning your tune a little bit, or do you think we're on our way to 5,000 on the S&P? That's where my mind is headed, the 5,000 club. Maybe not before the end of the year, but I'd say in the 1Q24, first half of 24, I think we'll be in the 5,000 club. What say you?
I'm not bearish, but it's so right now there's catalysts on both sides. So you've got the catalyst of lower interest rates on the horizon. So that's one part of the market. But then you also have a deteriorating economic system on the other side. So you kind of want to say like, okay, which one is going to balance each other out? Like what the hell are we going to do? And so I don't know which way to turn right now. So a lot of times when I don't know which way to turn, I just put on the brakes and I'm just like, look, let me be a little bit more data dependent. And just like you said, the thing that I've been telling people on the Patreon is very simple: stockpile cash. Cash right now, you're getting a fixed, almost like 5.5% return in a money market fund. The Fed is going to lower rates, but they haven't lowered them yet. So until they do, sit on something liquid or sit on an asset that's generating income, that's valuation is super low. So it's almost like a near cash like position. That's why if you look at our TLT position, that's a great position to be in. We're still getting monthly dividends from our TLT. And at the same time, we're getting capital appreciation as the 10-year goes down. Right. So sitting on TLT is not a bad idea. It's not dependent on earnings. It's not dependent on, some underlying, like the CEO's, wife slept with something and he had to leave all of a sudden and stock the crashes. Right. So there's no intangibles to worry about. So that's why TLT is a good place to be. And the reason for that is because if, let's say, we do get hit by some kind of credit event in the first half, you want to have that liquidity to sell and go in and just buy the shit out of this so that you can make those exceptional returns in the back half of 24 and possibly 25. So right now, I am not bearish on the market. I wouldn't sell everything off, but I would say it's time to go into less risky stuff. Don't invest in companies that are heavily growth. Look for the value plays, look for the easy soft targets. Don't try to target anything hard. But I've also been wrong too, Matt. Like there are a lot of great SaaS names that were sold off in October and November that are just absolutely killing it right now. But that's primarily because a lot of them have shown a lot of resiliency to the current trend. So right now, I spoke to someone on SAM. So some one of my friends on Patreon, Sam, and he was telling me about Confluent. Confluent made a freaking huge recovery. Now the thing is, like, I fundamentally don't really understand the business all that much, but he knows SaaS like the back of his hand. So the guy knows like what's actually worth looking at. And so when these companies they bounce back, they've done exceptional. CrowdStrike is another one. Today we saw Sentinel-1 go crazy. So these are kinds of things that like you really have to be like an industry expert to know like, hey, this is vaporware versus this is something real and tangible and it's just been oversold and eventually it'll come back.
Yeah, I'm trying to think of any particular businesses or areas in which are kind of out of place. Oh, another one that was mentioned talking about service companies, kind of United Rentals was one that this gentleman who was on CNBC was really into. And he was basically talking about, and for those of you who don't know, United Rentals, he was basically talking about if you walk through the streets of Manhattan, you see United Rentals everywhere because they're the largest basically rental company for equipment, whether they're renting Caterpillar equipment out, whether they're renting tools out, what have you. So instead of all these companies owning all these tools, they'll rent them because then they can write them off and it makes it a little bit easier. And plus you're always getting new tools, right? So he was talking about how he's long in there because they're the number one in the US. And he's talking about with respect to, and this is where it pays, if you're investing in these individual stocks, it's where you have to pay attention, because he was talking about people are probably saying, well, they mostly rent out to people that are non-residential focused building companies. And so if that's the case, then these guys probably aren't going to do all too well because commercial buildings are being hit and this and that. But he was also saying, well, there's $500 billion in spending going towards roads due to the Inflation Reduction Act and all these other stimulus packages that have been announced by the administration, the Biden administration. Why wouldn't that be bullish? That all has to flow through all these bills that are being given out and flow through all these different companies. So why wouldn't that eventually show up in the bottom line of this company? Just like how we were talking about Atcor last week, right? How, that's not going away, right? Like those companies generate a crap ton of cash. Like they're not just going to all of a sudden stop building homes, right? There might be a tightening in which people take a break or a brief hiatus because of interest rates. But that doesn't mean people are going to stop building homes. We're in a different time period than we were almost 15 years ago with the great financial crisis. So it was interesting to kind of hear that thought process kind of going forward. And I think the economy and I think the consumer is still very strong. I don't think that we're in a place where we are pinching pennies. Like last year I was pinching pennies. I was kind of scared. I'm not going to lie to you. And I honestly still think, I mean, statistically and numerically based off the GDP numbers, we were in a recession. They just didn't want to state it because it was milder of a recession than probably what we're used to these days because of the volatility of some of these recessionary flares that we see. Obviously, the great financial crisis, the .com, stuff like that. So us being in a recession last year, it kind of felt like it did in late 2018 when they started raising interest rates, right? Everyone started getting a little spooked and the market started to have a little bit of a cold and nobody was really happy. There was no Santa Claus rally in 2018, I can assure you that. But the thought process for me is, I think we're all getting amped up and ready. And I still think a lot of people have money on the sidelines, just like Chris alluded to, because you are actually getting a little bit of drip for your cash these days. It's not like it has been over the past 15 years where you're not getting anything. Hi, Chris, what's on your mind? What are you looking up? You're on mute, my guy.
Sorry, I was just I finally launched a Discord for the Patreon. So now all the DD and stuff, we can share it more openly. Patreon was great. I post all my articles on there, all the stuff, but a lot of people really wanted the Discord. So I was like, okay, let me set that up, get it rolling. And so, if you join the Patreon, it comes with a Discord and you can join and basically chime into the community if you want. I love the community that we're building. I got some really great information today from some of the community members. Like I said, hopefully it's something that we can build a good understanding of things around. Chris trying to figure out where he's going to be sleeping tonight. Yeah, I was looking up the local Hilton to see if there's any openings tonight.
Motel 6, Red Roof Inn. TJ, welcome, my guy. Hope things are going well with you, brother. I know that we've talked about Rocket Lab in the past, and I don't expect you to have a renewed view, but I figured the questions being asked, do you have any thoughts? Have you done any more DD or not yet?
I just been too busy with so many things. I have not got a chance to get there, but I do need to do more research on it for sure. Because I mean, the space economy is definitely something new that's coming up on a lot of people's radars. But I'm also doing the same thing with the nuclear industry. So I know a lot of uranium companies have just been skyrocketing. Like, let's take a look at that one real quick. The one that I keep hearing about is this one. Someone let me Cameco. So if you see, look at this. This is Cameco this year.
I know Junebug is always talking about Cameco.
Yeah, so it's something that like I said, I'm trying to understand it more. And then I saw some headlines come out today with the U.S. And like trying to get more nuclear. So the U.S.-led coalition to triple nuclear power by 2050 to address climate change. Well, one of the things you're going to need for that is you're going to need new nuclear reactors being built, but it's not going to be just regular giant, $5 or $10 billion nuclear reactors, but it's going to be something called SMRs, which is a new technology. So it's going to be small modular reactors that have inbuilt safety. But look at this, like the Palisades nuclear plant plans to build 2 new small modular reactors. Like, this is the kind of stuff that isn't necessarily covered in a lot of areas, but this could be big, especially if we look at oil being the commodity. Maybe in the future, uranium is that commodity, and it's a very limited areas where you can mine mine the isotopes in that resource to basically be able to make that energy work, you know. So even though you need a very small amount of it, you still need access to those uranium rich deposits, and investing in companies that have interest in those uranium deposits could be huge winners in the future. And they could even, I don't know, maybe one day those things can be the Exxon Mobils of the world where they power
Could
the
be.
world. You never know,
Could be.
you know.
Yeah, I think that there's unfortunate. So I've done. If you're ever curious, I've done a few CEO interviews with some guys that own uranium companies or lead uranium companies on the channel. I think I had the guy from Uranium Energy Corp on, or UEC. Let me just double check. But yeah, I've had a few CEOs that have approached me to chat about uranium on the channel, and I've learned a lot with those conversations about the industry and yeah, in 2021. So I interviewed the UEC and UROY, which is a royalty company, Chris. So I could actually talk about that one for a second. So UEC is the physical miner, right? But then there's, just like how you have like royalty trusts associated with like oil and gas assets, like in West Texas, people have their mineral rights and stuff like
The
that.
Texas, did you see that company? The Texas Railroad something. I forgot the company, but it owns all the land in Texas that they lease out. Hold on one second. I'll show you exactly which I'm talking about. Texas Land, and it's called Texas Pacific Land Corp. You
That's
remember
what it
that?
is. Yeah.
Yeah.
I haven't looked at it in a while, but I know
It's down
exactly what
today.
it
It
is.
was down almost 8% today.
But yeah, I don't know if I had the CEO. Did I have the CEO on? Hold on, let me see. Was it? Yeah, I think I had Amir on, or maybe I had one of his directors on the channel. But let me see. Let me see. It was, but basically, UROY is basically the same thing. It was a spinoff of UEC, where they basically just own mineral rights in a bunch of different plays and a lot of different. And Canada has a shit ton of uranium. Like, so Cigar Lake is obviously a big one that's owned by Cameco, but there's a few other plays around there. So everyone always in their presentations, there's a few uranium companies and mining companies that will always try to kind of like say, oh, well, we're nearby Cigar Lake, so we might have the same sort of opportunities as Cigar Lake did. But yeah, UROY specifically, they own 2% here, and that's just basically a royalty company at that point. So there's no operations, super high margin, because it's literally just the ownership of the leases at that point.
So Matt, I have to get out of here, but let's do this. Let's research uranium as a topic of conversation and double back next week. And we could do an entire episode on just uranium to see if there's any value in any of the companies that have just been on massive runs and actually could just only be the beginning of a secular bull market in this industry. Because like I said, this could be one of those things that we get in on early, and all we have to do is just hold it and relax and not worry about it.
Yeah, I'll do some research. I have a few companies. Some of them are more speculative. Some of them are just starting out, but there's a few that I can look at and some of the presentations and scratch my head and maybe put together a little bit of a.
Just a quick shout out to Catherine, one of my Patreons. She's giving me all the info on uranium. Dude,
really?
Some of the stuff that she's giving me is just like gold, man. It's just like I said, this is one of those things. I just have to like sit down with a cup of coffee and just read, So
yeah. Bill Gates and Warren are huge into the small modular reactors, so they talk about that on a quick bit, because I think what scares people is these big Simpson-like nuclear reactors. I'm trying to appreciate that KRIS has to go as well. That scares people. They don't want it near their house. They don't want to live near there. But at the same time, you have these small modular reactors that could pack a punch and also help in remote operations as well. So you could potentially fly it in to a small remote area that can help power where you might not necessarily be able to have the transmission lines going hundreds of miles. But if you have a central sort of SMR that you can then put radius around several homes that are in a remote location, it might help out.
And there's also a lot of new passive technologies that are actually built specifically so that you don't have you don't have like meltdown events like Chernobyl, right? So just letting you know that, hey, you know what, this is not the same fast breeder technology that they used back in like the traditional power plants. You know, the ones like the Fukushimas, even the Fukushimas wasn't that bad. Like the Chernobyls, the 3 Mile Island, Fukushima, like all those things, they were with a completely different technology. I think it's I forgot what the exact term is, but this is a new technology that has a lot more safety features built in that are passive in nature, so that this way it doesn't require any active manipulation in order to, you know, stop meltdowns from happening. That, you know, it just raises the safety profile. But nuclear does have a lot of PR issues to contend to. So, you know, we'll see. This is one of those things that we'll research and go into.
Could be nothing. Right. Could be something where we say absolutely not. But all right, my friend, I'll talk to you later. Good luck. Let me know. I know you're in all the way in Georgia, but if you somehow find yourself in Texas because of being exiled from the house, I have an extra bedroom for you.
Sure, man. Let me see if Southwest has any last minute. I'll see you
later, brother.
Later. Bye.